Hey guys, and welcome back to a new accumulation zone trade recap. But before we get started with the recap today, I want to go over the live results on the Scalper Pro stochastic RSI strategy on the US30 pair. This is our backtesting sheet right here, where I've been tracking the results for the first quarter of 2023 on US30. And now we're continuing with the second quarter of the year 2023. And as we can see, so far in April, we managed to take 73 trades in both the London kill zone from 2 until 5 a.m. and the New York kill zone from 8 until 11 a.m. And so far, we have a total net profit of 27%. But if we take a careful look at it, we can see that pretty much 99% of those profits originate from the London kill zone. We did not see that similarity during the first quarter of 2023, so we can already notice a difference that the performance during the New York session is starting to let go a little bit. That's mainly the reason why I only focus on the London session, because during that first week on US30 in the New York session, we made 4%. The second week, we made 1%, and the current week, we actually lost 4%. But on the other side, we managed to profit 16% during London within a single week. And all the trades can be found in the description box below. There's a link to the strategy results backtesting sheet. Then you can simply click on these links and you will see the link trading view chart. This has been a trading day where we had 3 winners in a row on US30, netting a total profit of 6%. Okay, but that's enough data for now. You can check out the strategy results sheet in the description box below. And I would say, let's continue with the trade recap. Alright, so now we're looking at the US30 chart on a 5-minute time frame. And it's about to be 2 a.m. New York local time, the beginning of our London kill zone. And on this very first candle right here, we saw that we actually closed above the VWAP, so we could not enter into the short signal that has presented itself right at 155 candle close. So ideally, we would have liked to see a continuation short entry right on this candle, but we did not get it. Let's see, because the signal is still valid for one more candle. Because that's candle number 1, the crossover candle, candle number 2. And if the next candle happens to be a white candle and also closing below the VWAP, we are going to take a short position. So what do we get? Perfect, we get a white colored candle, a close below the VWAP, and it's the candle number 3 since the crossover. So we are going to enter into a trade. Of course, we would have already prepared our position, and we would have also prepared ourselves mentally to take a new trade. And we would have also, let's say, planned the trade out a little bit to see where we would place our stop loss. So ideally, our entry would have been somewhere around the VWAP. We basically saw the candle moving the entire 5-minute period of this candle, so we would be dragging our entry around something like this, and our stop loss could have either been this swing high, but personally, because I saw this consolidation right here, this little box, I saw this consolidation. If we zoom out, it looks much more like a actual consolidation. But I saw it, and I personally decided to use an ATR stop loss. The ATR setting is for the London session set to 1.25. So I moved my stop loss to the upside, and it turned out to be a 16 pip stop loss, if I'm not totally wrong. No, even though the ATR distance is telling me 15 here, I think that's what I used right here. So, because I didn't use the proper entry. Alright, so 16 pips or 15.3, going for a 1 to 1.5 for us to hit our break-even level. So we're going to be drawing our break-even level into here. And now we drag it down to a 2 risk to reward. And this is our first entry for the day on the 3rd candle after the crossover. And ideally, we want to see a continuation to the downside, which we eventually got because we dropped quite significantly. We hit our 1 to 1.5 risk reward and hit our take profit, making this our first winning trade for today with a total net profit of 2% if we would have risked 1% on this trade. Roughly half an hour later, with the London opening, we finally started to see a pullback back to the VWAP, where we ideally like to see pullbacks too. If we bounce off the VWAP, that's always giving me that little extra bit of confidence to take the trade, even though I would take the trade anyway. Or you should take the trade anyway. But it's pretty much up to you then if your live results differ so much from your backtesting results because you are too picky with your trades. Sometimes, of course, you're avoiding losing trades, but sometimes, eventually, you're also going to be avoiding a winning trade, and you don't know actually which the ones are that ending up as a winning trade or a losing trade. So you're always better off to just take them all. And as we can see right here on this example, or on today's price action, we saw that the stochastic RSI pulled back with price right here, rejected by the VWAP. So we are now waiting for our crossover. We did not get it on this candle yet, so we're still waiting patiently. And right here on this candle, on the close, let me actually turn off the Scalper Pro because this is a bearish candle color. So our entry would be right here at the low of this candle. So now we could also have a look at the ATR bands indicator. You could have placed it at the ATR level, but this is a textbook pin bar rejection. We tried going back above the VWAP. Buyers wanted to buy the price back to the upside, but they got rejected and we actually closed at a lower price than we opened at. So I wouldn't go for the ATR stop loss here. I would simply place it at the high of the wick. Maybe you could add some little bit extra room for a spread, but for me, I place it right here at the high of this candle, going for a 1 to 1.5 to eventually break even, which perfectly coincided with the swing low right here if you have a look at it. But that's lucky coincidence, and our full take profit target sits at 2 to 1 risk to reward. And let's see how this trade played out. We hit our take profit immediately, and whether you would have placed your stop loss based on the ATR, based on the swing high or swing low, it wouldn't have been a problem because the market dropped pretty much immediately. And that's a reason why I love those pin bar rejections. A few minutes or couple of minutes after our second winning trade, so right now we're looking at a net profit of 4% for the day by risking 1% per trade, we got a bullish crossover right here, but we don't expect much because right now we're in bearish market structure. We're forming lower lows and lower highs. So unless the next candle would close in the blue color and also above the VWAP, we would only be looking for shorts, right? So let's look at the next color, and it's exactly what we asked for. This was a close call because it was moving around, and so you have to be precise with your entry, because if you, let's say, would have slept on a potential long entry right here on this candle, you would have missed out quite significantly, because right here we not just closed above the VWAP, we also changed our candle coloring based on the Scalper Pro right here from bearish to bullish, and we got a bullish crossover on the stochastic RSI 2 candles ago. So 1 candle ago actually. I entered into this trade, and now the big question is, where would your ideal stop loss be? So we have 3 options. We have the ATR, and the ATR is basically inside of our candle, and I don't really like that. 15.5 pips after such a massive candle. But on the other hand, I also don't like having my stop loss at the body low, because now it's a 40 pip stop loss. This basically requires us to go for a 80 pip take profit target. Not unlikely, but probability for us to hit our take profit target of roughly 80 pips is lower than if we would go for a smaller stop loss. So we could also go for the wick low right here at the low of the London session, and now we would actually need a 91 pip take profit target for a 2 to 1 risk to reward ratio. So what is the best option between between both extremes. The ATR is inside of our candle, so we basically don't allow it any room to breathe, to basically maybe pull back a little before continuing with this momentum shifting candle. We close above the VWAP. Sellers started to get into this market. I watched this candle form live. We've been pushed down, and then towards the end of this candle, buyers rallied in basically and pushed up, making this the entry candle that we received. So the question now is, what would be the ideal stop loss placement? And for myself, I don't really have to think very long or much about it. It would have been the low of this very candle. Because if we get rejected from somewhere around this level and we actually turn out to, I don't know, reverse above the VWAP and go lower than this candle, I want to be out of the trade. And that's how I'm thinking if I place my stop loss. If we go lower than this candle, I want to be out of this trade, because this allows me now that I have a stop loss of only 26 pips. Going for a 2-to-1 risk to reward ratio looks more likely, in my opinion, compared to a 90 pips take profit target. But that's just my opinion. That's up to you. But I think you will agree. So now we entered into this trade, and let's see how it played out. So we saw the momentum continued, but it also slowed down at the same time. So we see very small bodied candles on the way to the upside. We're starting to pull back, but as of right now, we did not hit our 1 to 1.5 risk to reward ratio. So we're still in the trade. We do not get stopped out at break even, because we move our stop loss to our entry as soon as we hit a 1 to 1.5 risk to reward ratio. So we see that the stochastic RSI is actually also pulling back down below the 20 level. Let's see, we saw a bounce off the VWAP and momentum kept picking up again. That's actually where we would have received another entry, but we're already in the trade, so we would not take this entry. And our take profit target has been hit very easily after this little pullback, bounce off the VWAP. So basically what happened here, if you want to look at it from a market structure perspective, is we had a move to the downside after a consolidation. We pulled back, forming a lower high, being rejected where? Of the VWAP right here, forming a new lower low, making this bearish market structure. We had accumulation or distribution, a move to the downside, forming a new lower low, lower high, lower low, and now to shift into bullish market structure, we would have to break right above this level, right above our most recent lower high, which is this level right here. So we broke above it, but the momentum didn't fully continue into our favor. So that's why we saw those smaller bodied candles to basically retest what level? Exactly our most recent lower high that has been broken. So we shifted market structure, we retested this high and continued to the upside. You don't have to know that. You simply have to wait for your signal to occur, because today was a perfect London kill zone, because right now on this candle that hit our take profit target, it's 5 AM New York local time. The London kill zone is officially over, and we made a total net profit of 6% by simply risking 1% per trade. This has been one of the best London sessions so far, and that's also the reason why this week only, during the London session, so 3 hours per day of your time, we made a total net profit of 16% by taking every single signal that we have received within that timing period. And that's incredible. I really hope that this in-depth London session recap that I do every day really helps our members who are trading the Scalper Pro stochastic RSI strategy to improve their live trading skills as well, because I'm really putting a lot of effort into it to explain every thought or everything that's going on during this kill zone. Of course in recap, but I'm also doing it live on our Discord server on a daily basis. So yeah, that's that. Make sure to join our Discord server if you want to learn more about this strategy and about the accumulation zone. And yeah, I would say now let's have a quick look at this New York kill zone right here, because okay, we are about to hit our stop loss. So make this New York session, or basically like you saw at the beginning of the video, the performance during the last 5 New York kill zones has been pretty poor. We actually managed to lose 5% now since this trade is about to hit our stop loss, because most of the time we got a really weird New York kill zone where we basically just consolidated. If we take a look at this New York kill zone right here, I think it was, okay, not this one, I think on Monday, we saw this whole range where we had 3 losing trades, and that's happening, that's alright. It doesn't matter what's happening in one single week, because London still made us profitable over the week. But if you would only trade New York, this wouldn't have been a very profitable week. Yeah, but back to today, we had our first entry right here at 805, which hit our take profit target going into 925 and 930, the New York stock market opening. Personally, I don't like these entries prior to 930, especially if we are looking at the high of the day. This candle close, if we look at the whole day, that's when the day started, Asia, London, New York, has been the high of the day, this candle close, and that's where we got our entry. And also as a little confluence, you see that during this trade, the price mainly only went to the upside. Very slowly, very slowly. Look at those small bodied candles on the way to the upside. And now take a look what the stochastic RSI is doing at the same time. It moved to the upside, down, and while price continued moving up, the stochastic RSI went further to the downside into the oversold area, signaling a bullish entry. But we did not see that at all on our price chart. We have not been oversold. We've been basically overbought. And this slight but important divergence of price and the stochastic RSI could have helped you anticipating that this might not be an ideal entry, especially at the high of the day, taking out. But overall, I think right now, okay, our stop loss has not been hit yet. We had 1 winning trade and 3 losing trades by taking every signal so far. I won't go over the entries right here in depth, because I don't want to make this video too long, which it already maybe is, because most of our watchers or viewers are, I think, only watching 1.5 or 2 minutes of each video. So yeah, I try to keep them as short as possible. Alright guys, so that is the end of today's trade recap. I hope you have learned something new. And if you did, make sure to subscribe to the YouTube channel and also give this video a like. This really helps the growth of my YouTube channel, so I would really appreciate if you do it. It's only taking a second of your time. And yeah, if you haven't yet, make sure to claim your Scalper Pro 10-day free trial, and also join us on Discord to stop missing out on awesome London sessions like these, and maybe New York sessions, but certainly not this week on US 30. Personally, for me, there are better Forex pairs to trade during the New York kill zone, because on Forex, it's still correlated with the US dollar and everything, but especially with US indices, the US stock market, which is basically the representation of US 30. During the New York kill zone, we have the 930 opening right here, which is usually very volatile. We usually have 830 news that impact the market. Today we had them a little bit later, I think at 945, which also made another big impact. And overall, I think, looking at the backtesting results as well, I think it's for US 30, it's better to just focus on the London kill zone and maybe to choose another pair such as pound US dollar or euro US dollar during the New York kill zone. But that's the end of the video. Take care, enjoy your weekend, and I will see you next week.